Good morning. It's December 9th, 2023, and this is the Wall Street Weekly Wrap-Up with your host, John Newquist. A slow week, not a lot of news, so it'll be a shorter podcast. AMD had their conference on Wednesday, and the new AI chip is getting buyers from Oracle, Meta, Dell, and Microsoft. And they said it'll have more memory than NVIDIA. Well, this is good, but it's not out. There's going to give some. You have to remember the demand is huge. NVIDIA is running a year lag time on their orders to deliveries. Everybody wants the AI chips, and if it's Intel that sells them or AMD, it really doesn't matter, because if you're trying to get your AI system started, you need the chips, and you don't need them a year from now. You need them now. So they should do well, but we'll see the sales. Charts on close to a breakout. We know what the high is. It was in a downtrend. It broke through the downtrend. Now we're going to see possibly a breakout. We're heavy on the semis, so we're not going to probably add AMD unless the revenues jump like Lisa Sue's talking. Lululemon, the darling of retail. Wow, very conservative conference call. Didn't want to offer guidance, seeing the softness in retail. But look at this. They clarified they were very conservative, and then the stock just jumped up to a new high. So, it's one of those stocks that you got to remember. Is it Nike? No. Is it Under Armour? No. Is it anything different than those two companies? And it's just they have better design and selection, and people like it. So as the mantle gets passed from Nike to Lululemon, Lululemon can hold it for a year, 2 years, or give it up next year. And the indicators, well, crude oil, wow, this is like 71. 7 straight weeks it's down. That's a lot. And so we figure the Saudis won't cut the production. We're at 13 billion barrels a day. I remember when we were at 9. Now they've got 13, and they're going to increase capacity. So, if you want to call it drill, baby, drill. It has been a lot of capacity added in the U.S. market. And guess who's making the money? Exxon, Conoco, all the oil companies. So you got to be in energy. Yeah, you're putting up with this low price for now, but eventually, maybe around the summer we should take off. Should be a recession, if there is one, going to be in late spring, early summer. Then hopefully we'll go on. I'm watching this unemployment because we're talking inverted yield curve, unemployment under 4%, and this is kind of new territory. So gold still over 2,000. Copper, we're watching it because $4 is a magic number. When it's $4, people are starting to pick up and do things and build things. The averages, well, look at the NASDAQ. Wow, we're almost at 40%. I don't know if we'll get there. I really don't know. But S&P, wow, 19.9%. Up straight weeks. Look at this. It's at the new record. It's at a new record. So, all those bears who cost you money by staying in a money market when you could have gotten, just by buying an index fund, if you did anything, 19%. Yeah, you're getting 4.5, and the market went up 19%. You lost 15% of your money. That's what you lost by not being in the market. Now, again, the Magnificent Seven, big chunk of this rise, but even the small caps all do better than the market. We're adding Bitcoin as in the form of BTBT, which is a Bitcoin miner. They mine so many Bitcoin every quarter. They've got Bitcoin. It's not MicroStrategy, but it's also well not known. And I think we have a good shot. When we bought it, I think if Bitcoin keeps on going up, probably get up to 450. And I don't know how high Bitcoin will get. It's like not a clear, fuzzy amount that's vettable. We don't know how many people have it. They always say 70% of the Bitcoin holders have not sold since 2013, so we'll see. Which it bothers me because how much is out there? We really don't know. I know what they tell us, but we'll see. And then, like I said, we've been thinking about buying the XLB for material stocks, but we ended up just buying 2 good material stocks. One of them is Lyondell. 5.17% dividend, slow uptrend. This is like a slow climb up. But, they're profitable, they do well. They will benefit when the companies, start coming back and manufacturing is down. Remember, all you got to do is look at charts of Deere and Caterpillar, and you realize it's slowing down. We haven't seen the big layoffs yet, but that's what everybody's bracing for in the spring. Are we going to get some more layoffs? Will unemployment go to 4.5? We'll see. FCX, I like its well-run company. It's a gold and copper miner. Very big on both of those sectors. Coming up to the point where the cross could happen. We're always looking at the 200-day moving average, and this course has been kind of wavy, but it's coming up. And I think it'll break the negative trend line, because gold's been up there hot. And, when they mine gold, they're making a lot more money than they were 6 months ago. So it's just the copper. The copper is a big part of their revenues, and we don't necessarily see it. And unemployment, surprise upon surprise. A lot of people are expecting 4%, and it isn't 4%. 199 jobs. Now the question is, what is it going to run into the election? The election's in November of 2024. Are we going to be below 4? 4.5? I mean, I don't know what a number is. I know if it's a 5, you don't want to be the incumbent. But, this is pretty good numbers. Surprising to a lot of people. And then, like I said, we bought a material. I would take out, we're not underweight materials anymore. That was my mistake. We bought BTBT. Isn't that kind of a neat name? Lyondell and FCX. And so we're all ready. Ideally, we're going to try to be equal weighted on the S&P 500 so that the techs are equal weighted to our materials, which are equal weighted to financials, and so on. We got all the sectors covered. I expect tech not to be the leader. I expect 2 other sectors. Some people are thinking it's going to be financial and manufacturing. I'm not sure, but I think we want to be in all sectors equally, not overweighted like we were this year, because we knew tech was down and we knew it was going to come back up. When we look at the buy and hold, that's what we try to do. Buy and hold definitely has outperformed everybody. We watch the moving averages because it's in a signal. When it crosses to the negative or the death cross, people are getting out of it. And same thing. If you can predict that FCS will cross, and you're right, you're going to do well. So the other ones have been around, really for a long time. I don't want to have to say how long, but a long time. And a lot of this stuff, some people use it successfully. I just don't see it. I used to watch all that stuff, and now I just watch the moving averages, and I watch the fundamentals. None of this is fundamentals. Is the company growing? Is the company profitable? You don't see all that stuff here. That's a big deal. So, but nobody wants to talk buy and hold because, here we are, we're holding the same stocks we did last week. Boy, you can't make a TV show out of that. So I will see you next week. Stay warm and have a good week.